Time now on the programme for all the latest business news, and Stephen Carroll joins me here in the studio. Good morning to you, Stephen.
Hi, Nadia.
It's been then a rough 12 hours on the stock markets. Tell us, what's been happening?
Well, there was a dramatic sell-off on Wall Street on Wednesday. That's sent both Asian and European shares tumbling in trading today. The slump putting Asian markets on track for their worst month in 10 years. Now, we'll check in on the European markets in a moment, but let's start with a look at what happened on Wall Street on Wednesday. If we take the broadest index of shares, the S&P 500, it finished the day down 3%. Traders saying it felt like panic selling in the last few minutes of the day. The index, though, has lost all of its gains since the start of the year, as has the Dow Jones. Now, the sell-off hit technology shares particularly hard. Netflix, for example, was down by 9% in trading yesterday. Now, the Nasdaq index, which is where these companies are listed, finished the day down by 4%. This is the S&P picture at the end of yesterday. As you can see, started the year here, and this is where it was yesterday, down 2/3%. So raising all of those gains. If we take a look now at what happened on the Nasdaq that I was just talking about, this is the latest plunge after a month of falls on the Nasdaq. The Nasdaq now down 11% this month alone, putting it formally in what's known as correction territory. The tech sector also having a tough day in Asia today. Many of the world's major chip makers based in Asia seeing sharp falls. This is the picture on the Asian markets. October really has been a miserable month for these markets as well. The Nikkei down around 10%, the Kospi and Seoul down more than that. Samsung Electronics, of course, a big factor in the Kospi, one of the main fallers today. Today in Europe, things are in the red, but the losses are looking to be a bit more moderate. But it's worth remembering that these markets are close to two-year lows. Paris's CAC 40, for example, opening today at a level not last seen since March of 2017. Mining companies and oil and gas shares among the main fallers there. So why is all of this happening? Well, there are a few factors at play, but many traders feel that the latest set of company results in the United States show that perhaps the earnings boom has peaked and that we're heading into leaner times ahead with lower sales and profits. Trade tensions playing into this as well as lower oil prices, which hurts oil companies. But it is worth remembering that Wall Street in particular was hitting record highs not too long ago, so there could still be plenty of room for those markets to fall further. Well, amid all that turmoil on the stock markets, there was good news for one well-known name on Wall Street. Tesla, the electric car maker, reporting its first profit in 2 years. That news sent the company's shares up by almost 10% in after-hours trading, as Catherine Viet now reports.
Defying Wall Street expectations, Tesla has reported a record quarterly profit and given a rare win to CEO Elon Musk after a series of missteps. Musk had been under fire over earlier tweets about taking the company private that resulted in his stepping down as chairman of the board and paying a fine. Hoping to turn the page, Musk told analysts in a conference call that he was excited for the future.
I've said before that we must prove that Tesla can be sustainably profitable. This quarter was an important step towards that.
This is only the third time in the electric car company's history that it has posted a quarterly profit. The last time that happened was 2 years ago, but the company has yet to turn an annual profit. During the last 3 months ending in September, the company earned just over $311 million. Musk has attributed the change in fortunes to growing demand for its Model 3. The car, aiming for a wider market and starting at $46,000, is priced significantly less than its other two models. Of the 80,000 vehicles made in the third quarter, 60% were Model 3s. The company is looking to expand its reach with plans to sell the Model 3 in Europe next year. The other bright spot for the company's balance sheet, it generated more cash than expected, reversing a trend of burning through its cash reserves. The stronger demand helped boost the company's revenue to $6.8 billion, more than double a year ago.
Finally for me, the British department store Debenhams has reported a massive loss of more than €550 million. The company is closing some 50 stores as a result, putting 4,000 jobs at risk in the UK. The majority of the loss is down to a write-down in the value of Debenhams assets. Shares in the company have lost 3/4 of their value this year after a series of profit warnings. Debenhams' poor performance comes amid weak wage growth and economic uncertainty in Britain. Its rival House of Fraser went into administration in August. Big names in the UK High Street disappearing.
Yeah, sad times on the UK High Street indeed. Thank you very much. Stephen Carroll there with our business update at this hour.